I wouldn't be running toward tech. I do think that the tech companies, their employees, their balance sheets are all located in the higher tax states. We're still waiting to see how much relief comes there with federal versus state net out. We're also seeing a situation here where some of the provisions of the new bill are not super friendly to the universities, which are very, very important to the tech infrastructure. And additionally, these companies have had some trouble in the markets last week or two. They've had fabulous years, up 40% and more. So I don't really see the need to run toward them. I think there's more risk and reward. Plus, a lot of folks are just sort of holding winners because they want that lower tax regime for 2018.
Okay, so we're calling you our bear. Chris, you're our bull in this segment. Why?
Well, I look at the seasonality right now, Bill. When you look at December, the month of December over the last 20 years, NASDAQ 100's only beat the Dow Jones Industrial 30% of the time. And when it does, it's basically flat. I mean, it's 0.0% return. When you look forward to January, 68% of the time, the NASDAQ 100 beats the S&P 500 and the Dow by more than 2%. This is a seasonality effect right now on stocks. A lot of people looking at it and trying to compare it with the tax situation. But the bottom line is you've got a lot of stocks here that are up 50 to 100% in the case of NVIDIA and some other companies. Profit taking right now. You've got portfolio managers that are taking money, putting it into lower volatility stocks, trying to wait until the year-end print of those statements. You're going to see money flow back into technology after the first of the year.
Max, I thought a lot of folks were talking about the tax bill and the tech companies because they have so much cash overseas. There's going to be a one-time, much lower rate on that money. They don't even have to physically repatriate it. They're going to pay it once, and then the money can stay wherever it is as we go to a territorial system. Once all that, I mean, those are huge numbers for companies like Microsoft and Apple, et cetera. A lot of people think they could do some big transformative deals once that money is, quote, unlocked.
Look, it's unambiguously good for them to be able to repatriate money and to be able to do it at a rate that's not too likely to dent the balance sheet assumption. That being said, they've been doing awful well borrowing and leaving the cash hoard offshore. Most of them will anticipate greater growth offshore, and some of them are a little bit nervous about the temporary versus permanent and some of the corporate alternative minimum tax provisions, as well as some shifts in tax law globally. So while they can do it, it's not so clear to us that they will do it, that they'll do it in a way that's really meaningfully constructive in the short term, because I do think this year is a little bit different, just given the size of the tax revamp we expect and the near certainty that we get some kind of major alteration to the rules of the road coming right after the heels there on New Year's Eve.
And Chris, along those lines, I mean, the repatriation tax aside, a lot of people feel like the Silicon Valley will be a region that doesn't benefit from tax reform as much as other industries would. And that's another reason why they've been selling off here. What do you think?
No, I think it's going to go the other way right now, Bill. There's a huge question around the taxes. I think what we really need to look at when you're looking at the fundamentals and taxes and such, look at what's going on right now in the industries, especially the semiconductor stocks. There's a lot of innovation right now, Bill. If we get to repatriate a lot of that money, you're going to see companies reinvesting it into those innovations right now. Forget about the fact that there's going to be this skepticism if they do repatriate that money and they don't reinvest it. I mean, there's going to be a huge outcry if that loophole kind of opens up. You're going to see a lot of companies take advantage of it, if anything, just to look good right now in the eyes of the United States. But they're really going to put that money to work. And I think you'll see Silicon Valley and these other areas benefit from it.